Hi guys, this is Ruby with MRB Financial. Thank you so much for checking in today for our topic of the week on this beautiful monthly. Please don't forget to follow us, like, share, subscribe on our Facebook, YouTube, Anchor, and Spotify. And don't forget to invite your friends and family as we look forward to add value to your financial house. Let's get on with our topic of the week. For our topic of the week, we will discuss a miscellaneous 1099 form and why you will get it. As of today is February the 3rd, 2020. There are 20 1099 forms. They basically, what is a 1099? A 1099 form is an income payment of some source form. Basically, if you are a homeowner, a business owner who employs contractors, you're going to give them a 1099. That is basically, you could compare it to a W-2, but they're totally different documents. But they report the same thing. It basically reports I paid somebody for a service, and as a provider, you're gonna send it out if it's over $600. As of 2020, it will change to $400 that you are required to mail out all your 1099s for your contractors. Who would use this form? For the most part, is really anyone that's considered an independent contractor, freelancers, accountants, attorneys, real estate agents, any basically labor workers as well that help in the real estate industry to fix up houses. Those are the main folks that will get a 1099 miscellaneous forms. The other types of forms are basically, let's say for instance, the 1099 DIV, that's for dividends. If you receive dividends and you need to pay interest on it for whatever, taxes on it for whatever reason. Oh, I'm having a hard time talking today. That's the form that you're going to receive. So in this instance, it will be the 1099 MISC, which is miscellaneous form. As a independent contractor, although you don't receive a 1099 form, you are still supposed to pay taxes on it, even if you made under $600. So you may not have received it if you didn't make under $600, but it will be at your discretion to go ahead and say, hey, I made this money, I want to pay taxes on it, although your provider may not send you one. So you are still required to pay taxes on it, but your provider is not required to send you out a 1099 under $600. For the year 2020, it will be $400. So it's been lowered for that. So for the 1099, what can I do with it? What do I do? Do I give it to my account? The answer, yes. That is basically how you're going to report your income. If you're an independent contractor, most likely you're also going to have expenses to be able to fulfill the duties of your job. Let's say that you are this contractor that we talked about, you're fixing houses and you needed to buy supplies for you to deliver the labor that you promised you would. You replace the kitchen. Let's say you remodel the kitchen. Well, as part of your contract, you might have included that you would bring the supplies for you to perform the job. So you had to pay for that, right? Make sure that you tally up all your expenses as well. They go according to your profession. If you're an accountant, if you're an attorney, if you're a real estate agent, you're obviously going to have different types of expenses. They're going to be service expenses, right? So you've had to market, you had to advertise, you had to make calls. So you have different types of expenses. They may not always be tangible. You can't always grab them. You had to pay a service for a service. So you make sure that you include those. What I am going to go over really quick is the expenses that are not included across the board for anybody. And if you have any questions, as always, please do go to the IRS as far as the code for what is covered and what is not. So business expenses that are not allowed as a tax deduction is fines and penalties. So if you didn't pay your bill to the IRS and you want to say, hey, I have a tax deduction because I didn't pay my bill on time, it's a penalty. They don't like that. Political contribution. So your best friend is into politics and they ask you to help them fund their campaigns. Those are non-tax deductible. Illegal activities, we already know what those are. Capital expenses, they are not considered short-term. They're considered long-term, so they would not be put in on a short-term basis. You would depreciate them over the life of the house or car or equipment, whatever it was. So let's say you bought a machine that this machine is supposed to produce X amount of whatever boots, let's say boots. And this machine is supposed to be good for 5 years, and you paid $500,000 for this machine, then you get to split that up over the life of the machine. So $100,000 per year. So that's the reason why it's not considered a deduction, because it's really not. It's a capital expenditure. Federal or state income taxes, gift taxes, or other taxes. You don't deduct those taxes. Your tax bill is not deductible from your business federal return for either the state or the federal. Hobby losses. So if you like making invitations just out of hobby and you sell them for a little bit of money, but you're not really into business for them, losses are not considered because it's a hobby. You're not doing it for the true intention of making a business out of it. You're doing it for fun. It's a fun little business for you, and you know that's really all the purpose that it serves. Commuting costs, you go back and forth to your job. That's not considered a deduction either. Business gifts over $25. So if you do any kind of gifting, your maximum is $25. Business clothing except uniforms are not deductible either. Basically, you could use it for outside of work purposes. It's not deductible. Home office space. This one, it says not to, but please be sure to check because it is allowed under certain criteria, very strict criteria within the IRS system. So we're just going to say it's not, but please be sure according to your industry, to your job, that you check whether or not you fall within those guidelines. And then entertainment expenses like, going to the basketball game, going shooting, going any entertainment type stuff that's not covered. Meals are covered. They're covered at 50%. So that's different. And that is it for today. I hope that if this kind of helped you realize what that 1099 form is. It's basically a form that you bring saying this is how much money I made. Typically when you have a 99, for the most part, you are going to have some type of expenses to go along with that. Be sure that you check what expenses fall under your criteria, and then make sure that you understand if you should be maximizing on those expenses, and then what your 5-year goal is. Because remember, if you're trying to buy a house, if you're trying to buy equipment, if you're trying to buy anything, they're going to ask for your 1099, not your 1099, your income tax returns from the previous years. I believe lenders may ask for up to 3 years. So if you're constantly putting in losses, you're basically saying I'm making no money because you're trying to get the most for your tax. And then you're taking all of the deductions, all your expenses, and then you're coming to buy, and they're like, well, you make no money. You spend all your money. Be sure that you talk to your accountant about that. So that brings me to our end for our video for today. As always, this is Ruby Velasquez with MRV Financial. Thank you so much for joining us, and I hope that this video brought some light to your 1099s. If you have any questions, please do not hesitate to reach out to us. Thank you so much and have a great monthly.